Hello, traders, and happy Friday. So it's about 25 minutes before the close on Friday the 21st, and I'm going to go ahead and do the weekend update now. So just kind of want to walk through everything. Let me move my face out of the way here so we can look at our various open positions. So these are the different open positions that we have right now. This one we just opened, so this is a broken wing butterfly all the way out in June. Hard to believe I'm saying that already, that we're putting these on out in June. So, anyhow, so this is a typical broken wing butterfly. This is our calendar trade that expires next Friday. It's been thinned out once or twice already. And we've got another order out there to thin that may hit yet today, but probably not. One of the things I want people to notice, I've mentioned this before, that on Fridays, the market makers tend to drive up the volatility a little bit, which tends to sometimes decrease what appears to be the profitability in these trades. Now, earlier today, this trade was showing about $330 in profit. As you get later and later in the day, where normally you would think profit would increase on a regular day, on Fridays, that tends to maybe get pushed down a little bit. So I think what we'll see on this is Monday, if the market trades in this same general area, I think you'll see a very quick pop up in profitability Monday morning because, again, the market makers aren't pushing that down against us. So this is the one class trade that I think we had to adjust quite a bit. And or excuse me, we put it on and the market ran hugely up, not giving us much opportunity for adjustment. But we did raise this right wing. And as the market has pulled back a little bit, this has creeped into a slight amount of profit. So if the market, pulls back a little bit more next week, we might be able to pop this thing off for maybe 7-10%, somewhere in there. Of course, our RUT trade continues chunking along. We put this on really well, got a good fill on it. Again, don't like trading RUT. The bid asks are really wide, and but we just keep laying orders out there, and they just keep getting picked off every few days. So that's what we like to see. And then we just entered this calendar today as well. And this is out 2 weeks, 2 weeks on a Friday, and then with the long being the following Monday. So those are our current open trades. Let's take a look at our market here, and then we'll look at our closed trades. So this is where our market's at right now. We are making higher lows and still slightly lower highs, although we're definitely in what I would call a wedge pattern right now. And we're going into heavy earnings season here in the next week or two. Lots of earnings are going to be coming out. And we're going to have to kind of see how those drive the market. There's some big ones next week with, I think, Microsoft and Amazon and Google, et cetera. And those can push this market huge one way or the other. That's why we're really thin on our trades right now. We don't have a lot on. As I think you guys know, I trade about a 200K account. I only have about 20 to 25,000 in risk open right now, or in margin being used in that account right now, because I want to see what's going to happen next week. But I have to reset my expectations for income for next month as well. Rather than paying myself, 7, 10, whatever it is, it might only be 5 next month. So that's the life of a trader. Is you have to adapt to those things, have enough dry powder set aside that that's not a big deal one way or the other. So anyhow, expectations market wise, it's really hard to predict right now. But I would expect if the market did go up, I still feel like right now we're at a little bit of a stalling area here around 4,200. We could potentially just sort of chop sideways in here, and then probably at some point have a bit of a pullback back down here into the 4,000 range. So I'm largely playing for a 4,200 to 4,000 range in the next couple of weeks. Again, any big move could certainly, or any big announcement in the markets, earnings, etc., could certainly push us outside of that zone. But that's kind of what I'm expecting or looking at this point. Let's take a look now. Let's come into reports, and we'll go to advanced portfolio performance. So we can see here, this is the JP Morgan trade that we just closed out. And, that was one that we battled back to a profit. That was one that I see I've got my trades on here too. Let's narrow this to just class trades. There we go. So that JP Morgan, we battled that back. That was a fairly sizable loser at one point, and I continued to trade it just to basically show people how it could be potentially traded to get back to at least a lower level of loss or possibly a little profitability. All that said, you need to make an intelligent decision when you're looking at that risk to reward in battling some of those trades. Because our long strike expired in just 1 week from our short strike here, it did not give us a lot of room to play with that or a lot of room to adjust it. And we had to take some pretty big potential risks in making that adjustment. But in this case, it worked out okay. But again, you need to evaluate that each time you're in that situation. We also then had this broken wing butterfly that we closed out for a small profit. Then we had our IBM earnings trade. That was a nice one, up 108%. Then we had the Las Vegas Sands that didn't go quite so well. The market really bumped up on us in both of these cases, but we were able to, get some profit out of IBM. Las Vegas Sands, it just ran too far too fast. And let's see, was that this week that we had our Netflix? I believe it was. Yeah. So we had the Netflix trade this week and the FedEx trade, and then that was it. So a nice run of trades that we closed out this week. And again, our open trades, of course, are looking quite good. We can look at a bar chart that shows all of our wins and losers here. And then we can look at the overall equity curve of our class trades. So, so everything's moving along really, really well. I think we just, again, need to reset some expectations going into the next couple weeks here that we probably won't continue to have this, this steep or profitable of a curve just because we're going to have to, we've just got fewer trades on right at this moment. And then one final note, I will be heading Sunday to Hawaii. I'll be there for a few weeks. And of course, the markets open really, really early in Hawaii. It would be 3:30 in the morning. So for the next few weeks, I probably will not be at my desk or I say my desk. I will probably not be on the patio with the laptop in my lap until maybe 5:30 to 6:30, somewhere in that window, Hawaii time, and that's going to be about 12:30 Eastern time. So, if people have questions or posts and things like that, it's entirely probable that you won't hear from me for the first few hours of the market. Please know I'm not ignoring anyone. I'm just trying to catch a few hours of sleep. Along those lines, we will likely be looking at doing some earnings trades as well. And I will, as I always do, set some closing orders. If we get into an earnings trade, I will likely set a closing order for the following morning to close at least a portion of the trade, but I will not be there at the open. So if the trade ends up in our window and I can pull some of that off while I'm still sleeping, great. If there's something about it that's going to need to be adjusted, etc., I won't be addressing that until I get into the office. So if anyone looks at these earning trades and they're unsure about exactly how they will work, if it goes against us one way or the other, and exactly how you would adjust if it goes against us one way or the other, maybe steer clear of them, or just do small size, etc., or at least at a bare minimum know that I won't be addressing them there at the open the way I have in the past week or two. So that's it for now, everyone. Thank you so much for listening to the weekend update here on April 21st of 2023. Thank you.